from Daily Forex. This is Chris taking a look at the Bitcoin market. And you can see that we have pulled back initially during trading on Thursday, but then turned around to form a hammer yet again. Now, looking at all these hammers sitting on top of this trend line brings up an interesting subject, and that's risk to reward. Now, here's the thing. When you're a trader, it's all about what you're risking. And right here, I think once you break that candlestick to the downside, it's very likely we will go looking towards the blue EMA, which, once that breaks down, by the time we get there, I'm going to call that roughly 8,000. But when you see this much buying pressure underneath, it does suggest that there is a certain amount of resiliency here. And well, what does that tell you? Sometimes when you look at the markets, you need to look at where they won't go. And where they won't go is below this trend line. Now, that doesn't mean that you mortgage your house and throw it all into Bitcoin right now. That's not what that means at all. It just means that the odds seem to be favoring the upside, probably move towards 12,000. If you're wrong on your trade in a situation like this, that's a major breach of support. So then you can become just as confident to the downside. It's very difficult to imagine when we break down, but we do have central bankers meeting in Jackson Hole, Wyoming, so they may say something that moves the fiat market and has a knock-on effect over here. But really at this point, it just looks like Bitcoin is trying to tell you that there's a lot of interest over here.